The price for a detached home in Calgary has broken the highs of last year, setting the new benchmark price being the most expensive it has ever been in Calgary's entire history. If we're going to see continued month over month price increases, then we're going to continue to set that new price point and break records that we thought we were going to leave alone from last year going into 2026. So let's dive into it here. Now, the benchmark price for a home is $769,800, up $9,300 from last year. So let's dive into that. Now, my name is Adam Fife, your Calgary Realtor. There is a lot of information that I have clicked in this description here. If you're looking at understanding what the market's doing, there's PDF reports. If you want to know what your home is valued at, there's an instant home evaluation tool. And there's just a lot of free information here. So do not hesitate to reach out, ask your questions, and come to the channel to find the value. Let's continue on here. This is what the Calgary Real Estate Board has written about the single family market. If you want to pause it, read it on your own, skip to the next chapter, I won't be offended. Detached sales totaled 1,035 units in March, a year-over-year decline of 10%. The decline in sales was met with improving new listings, supporting inventory gains over last year's extremely low levels, right? We need to make sure that we remember that extreme low levels of last year. So obviously there's going to be some negatives, but the pricing is still increasing. The improved supply compared to sales has caused the months of supply to rise to just over 2 months, a significant improvement over the less than 1 month reported last spring. However, the months of supply continue to remain tight, with less than 2 months of supply for homes priced below $700,000. We are seeing a shift towards more balanced conditions for homes priced above $800,000. So again, these market reports, I always say it, we want to make sure that we're breaking it down into individuals, not just looking at the high level, but kind of breaking it down for your personal situation. So, like mentioned, detached home prices are up to almost $770,000. We are still seeing a $9,300 increase from last month and $32,000 from last year. We have seen a small decline from the year-over-year percentage, still at 4.1 compared to last year, and most likely going to stay in the positives all throughout 2025. Obviously, there's going to be some changes happening with the political atmosphere, some tariffs. We're going to touch on that in future slides. But for now, I'm still predicting that we're going to see some growth in the single family market in Calgary. Go ahead and comment your thoughts on that. When we're looking at single family homes, right, we're looking at the benchmark price. Let's just make sure that we're putting the attributes into play, right? Every single quadrant is going to have different attributes, putting a different price point on those quadrants. So don't just look at the price and think that that's it. You want to overlay that with the attributes. Now, this is a really good diagram as to what is happening in this market throughout the entire city. The red bar is the price, right? We did see some declines, dropping almost $20,000 from the highs that we saw in June, July, kind of hitting our lows in the winter, which is quite normal. And then a pretty sharp increase, almost looking like it's very similar to the increases that we saw in Q4, Q1 about a year ago, right? We are seeing the sales starting to pick up. We are still seeing high amounts of inventory throughout the entire city, but pricing is also on the rise. Is it in one or two quadrants, or is it throughout the entire city? We need to break it down to figure out where the heck this increase is coming from. So this is the information from the previous slide in numerical fashion. You can see the sales, the new listings, the inventory. The days on market is around 27 days. So when you're thinking about just how slow the market is, again, compared to those extreme lows of last year, we are seeing the market slow down. But with that in mind, we are seeing these prices increase, right? The benchmark price, the median price, and the average price. Even compared to last year, the median and the average price are up around $20,000, right? So more activity in this market at those higher price ranges pulling up the benchmark price, right? If the average price was a little bit lower, right, it would be the lower end of the market pushing up the benchmark price. So when we start to look at this, this is the detached market. This is kind of the sales. I really only look at the year to date on this slide. So you've got an interesting layout here. So you see the sales are down, and the sales volume is down. New listings is up by 25%, quite a bit more new listings, which is great to see. Inventory, the year-to-date average is 1,700 per month. Months of supply, year-to-date average is around 2.17, and the month itself was 2.13. You can see that last year we were under 1 month, which is an extreme seller's market throughout the entire city. Obviously, the prices are going to increase at that point. I would imagine prices are still going to increase at 2 months of supply, even in March, right? It's still a seller's market. You still need to make sure that you're staying competitive when getting into this market, right? You don't want to just, dilly-dally. You want to get serious and actually get into the market with the right preparation as well as the right information so you know that you can act quickly. Yes, there is more homes to select from, but at the same time, you want to make sure that if you are looking as a buyer, you are paying attention to the price points in the area so you can understand if it's actually at a good price or if it's a higher price that might sit on the market a little bit longer. And that is configured over consultations, right? Sales to new listings ratio, right? We're down 56%, right? It's pretty low compared to what we saw last year. Sales to list price, on average, there's homes that are selling underneath the list price that people are putting on. You see the days on market, year-to-date average is 30, but for the month it was 27. And then the price points, we don't really need to touch on that because we'll do that in future slides. So let's break it down, right? Let's look at the sales. We'll look at the new listings, the inventory, and then start to talk about the communities, the quadrants in general. So when I look at sales year-to-date for the entire city, it still looks like sales is relatively strong, right? We had more sales in 2017, but when you actually look at the price points, 2017 benchmark price was like around 500,000. Now it's at like 770. So the sales are still going relatively strong. It's stable. It's not as crazy as it was in 21 and 22, but compared to the last 3 years, it's on par, right? You start to look at the sales by price range, right? You can see that, again, the outlier of 2022 is just absolutely insane. You can see 400, 500, 600,000 saw a lot of sales, where that's more or less shifted now to the $600,000 to $800,000 price range. Million plus has actually stayed relatively flat, whereas there's been some slight declines in the sales activity compared to the previous years. Now, we start to break it down into different areas of town. This is by quadrant. So this is the sheer number. So South Calgary has 233, where Southeast is the second most, as well as North and Northwest, yada, 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 right? If you are looking at getting into the market, it is good to break this stuff down, but we need to make sure it's personalized for yourself in that community. So new listings, right? We've seen an uptick in new listings, but still below historic levels, right? Again, 2021, 2022, we saw a huge dump of new listings, but it was offset by the amount of sales that we had, right? And it still had an increase in price point. It was an absolutely wild year in 2021, 2022. 2023, 2024, there was an ultra low market in the sense that there wasn't a lot to choose from and the sales were still fairly elevated. 2025, we are seeing some more listings come to the market, which is fantastic. It is inching towards a balanced market. It could absolutely get into the balanced market territory depending on what happens with this election, depending on what happens with these tariffs. We don't know quite yet, but there is a real probability that it could get into balance, which is going to flatline the price increases. We're not going to see the dramatic increases that we saw before, but I would still say that there's a lot of interest in Calgary real estate. So when we overlap that into the inventory or the amount of homes left over at the end of the month, right, it's great to see it. We're kind of back to that 2021 level, right? We're not at the highs that we saw from our depressed years of 2015 to 2019. Is it possible to get there? Absolutely. The city has expanded. There's more units now in the market, right? I wish I knew the number, but there might have only been so many homes in 2015 where it's probably gone up like 20%, but the amount of homes that are on the market compared to that time in 2015. So we might get up to these inventory levels pretty quick here, but at the same time, the sales are still strong enough to somewhat support that activity, right? So when you look at the total inventory, it is important to break it down in a price point. You can see that the inventory, for the most part, is being held up by the $300,000 range, which is apartments, right? Everything else is fairly flatlined. This is $1 million plus, so it's a lot of different price points, but you can see for the most part, it's pretty flat between 500 and 700 homes left over at the end of the month for each price range. So with that in mind, the trend is obviously going up, right? It's still fairly flat compared to what we've seen in 2022, 2023, 2024, but it is increasing, right? You can see a accumulation of around 2 months of supply, where last year we were hovering around just under 2 months, right? So the trend is going up, but over the last, you look at the trend line, it's still relatively similar to what we've seen in the past. Again, need to break it down to the quadrants, communities, areas of town. If you want to know what the market has done to your personal property, go ahead and click the link, right? This is an instant home evaluation tool. It's super slick. It's really neat. You can go ahead and scan this QR code if you want. Me or my team, we're going to reach out. We're going to say hi. We're going to say thanks for using it and just ask, are you looking to refinance? Are you looking to make a sale? Do you just want to know what your equity is worth in today's market? We're not expecting you to sell, and I'll say that on the phone. We're not expecting you to sell, but we want to offer this service for people to just understand where they're at financially, right? It's a really good tool to get you under kind of in that realm of understanding of how much equity you have. Maybe you want to do a renovation. Maybe you want to buy an investment property. Whatever, right? It is a lot of good information. So this is a breakdown of the different quadrants in Calgary. I'm going to zoom in here so we don't skip ahead too much and look at those price points quite yet. So you can see that the sales to new listing ratio is on average around 55%, right? So the amount of sales compared to the amount of listings, it has dropped significantly from last year. You can see that even places like Northeast and East Calgary for the detached market are under 50%, right? It's kind of surprising to see East being as affordable as it is, right? The benchmark price for a $521,000 home, when we start to look at the attributes of East, that was a home built in 1972, right? It is a double detached garage compared to some others. So it's not the most sought after home, but it's still fairly affordable for people that are coming here. They only had 24 sales compared to the 71 new listings, right? You can look at the opposite end of the spectrum. You can see Northwest is still 62, still a fairly strong. There's a lot of movement there. And then everything else is hovering around that 50, right? Once the supply, start to break that down into individual quadrants. You can see that East as well as Northeast are in a more of a balanced condition. Northeast makes sense to me. 3.5 months. Shouldn't see a whole lot of sway in that community or in that quadrant because there is a lot to choose from. There is over 388 homes that were left over at the end of the month, right? Allowing buyers and investors to have a lot more options in that quadrant. So when we start to look at the benchmark prices, right, and you start to look at the month over month increases, we're still seeing increases across the city. You can see that the smallest increase, again, was East. Surprisingly, the most affordable. Not a lot of people want to live there, understandably so. But if you are looking to buy a home at a fairly affordable, quote-unquote, price compared to everything else in the city, it's not a bad option to consider. So when we start to look at this, this is the actual number value of how much these homes have increased or decreased from last month. So you can see places like West Calgary, right? Huge increase of $30,000, as well as City Center, huge increase of $18,000 in 1 month. So where did all of these come from, right? When we start to look at the MLS here, and I go to the criteria, I put in the sold information from the last 30 days, so we're only looking at March data. We're looking at detached homes, and we go to results, right? You can see that the percentages are here. So how much over list price did they get, right? So you got 25%, 21%, 20%. You've got all four quadrants, really. City Center, East, West, Southeast. City Center saw some pretty large increases here, 17, 20, and 35 within the top 5 of the most expensive over list price that they got. I can't seem to explain that properly. And you start to scroll down here, you see some interesting things, right? A lot of these homes were priced relatively well. If you're curious as to seeing some of these homes that are in your quadrant and want to have more questions, reach out and ask. I'm more than happy to explain this one-on-one with you a little bit more than I can publicly. But you can see in the month of March, just as an example, let's keep going. 101. So we're at 200 homes sold over list price. We can continue to go here. Let's go all the way down. 200 plus 66, so it's 266, right? 266 homes end up selling over list price out of the 1,000. So it's less than a quarter, right? About a quarter of the homes sold over list price. It'd be interesting to see what sold at and what sold under. But again, break that down more on a personal level rather than going too high level on this YouTube video. So reach out, ask your questions. Now, this is an interesting chart. We're starting to see a slowdown. This red bar is the year-over-year percentage increase from last year, right? It is obviously slowing down from the crazy highs that we saw in 2023, 2024, upwards of 15% year-over-year increase. Now we're hovering around 4%. We're probably going to dabble down near like the 0 to 1%, which is pretty understandable. I don't think the detached are going to dip into the negative year-over-year, especially already increasing past the highs of last year. I would imagine next month we're probably going to see a little bit of an uptick here, starting to go back up a little bit. Not much, but I would assume that we're probably going to see some continued increase. Again, we have to watch the election and we have to watch the tariffs, right? There's a lot of different things that are being put into play here, and I get a lot of great questions about it, right? What's going to happen if the liberal government gets in? What's going to happen if the conservative government gets in? Well, I can tell you it's probably going to be two very different things for the optimistic view of Alberta and Calgary especially. So with that in mind, like mentioned, we've already peaked past the highs of last year, which were the record-setting prices of that time. We started to slow down. We saw this play out in 2022, okay? Different time, obviously, different economic indicators, but I remember people saying that was it. That's the crash. We're done. We're going to see the 10% declines. It's going to continue to fall. Interest rates were higher, right? We're going to see the slowdown. Well, when they shot the interest rates up, the pricing did decline. But then that next year, we just continued on the up and up. And then we went up even higher in 2024. Again, I don't think we're going to see the same amount of increases in 2025, but I would argue that Calgary is still sought after for lots of people looking to move here. if the tariffs stay in place and Ontario and Quebec loses jobs and a lot of people have this new opportunity to potentially start fresh somewhere, Alberta is going to be a highlight point for them people. I would imagine people are going to look at Alberta and consider moving here if there's a Liberal government moving in. I would imagine migration is still interprovincial, is still going to happen. Conservative government gets in. It's hard to say exactly what that would look like, but I would imagine that there's going to be an increase in excitement for investment in the oil and gas sector and other areas, pipelines and stuff like that, which is going to increase the Calgary real estate market. It's going to increase other things that people are excited to move here, right? Yes, we're still at a little bit of a higher unemployment rate, and that could increase, right? These things could go in an opposite direction. I'm only making estimations based off of what I currently see today, right? When we start to look at even the commercial side of things, Calgary still has 30% vacancy in the downtown market, right? There is still quite a bit of units that are at 30% vacancy, right, in the Calgary core. We dropped down quite a bit from what we saw in from the oil crash, right? When 15, 16, 17, a lot of these businesses left Calgary, left Alberta, which left us with really high vacancies. You can see COVID as well. It shot up the vacancies. So we are in a better direction, but we're still not out of the weeds quite yet. They're doing some conversion programs and stuff like that. It's interesting to see how that's going to work out, trying to convert them into units, but it's very expensive to do. Now, brought up tariffs. Both of these news articles are going to be in the link in the description. We did escape tariffs for now. Who knows what the hell is going to happen? This changes day to day, hour to hour. It's very hard to keep up with. It's almost impossible. So kind of a cool one here. If you're not already subscribed to ATB's The 24/7, it's a really good news article for Alberta-based economics, right? They have a lot of good topics that I really enjoy reading up on. I read every single one that comes out. Now, it's kind of cool, not cool, but it's interesting to see how many other countries are just getting smacked, right? You got your China here, it's like 33%, Switzerland, 31%, Japan, 25%, right? Norway, 16%. All it's going to shake up a lot of things. And there's a lot of uncertainty what's going to happen with the global trade and the economy. I would still argue that Calgary is a highlight, a hotspot, a place to be in 2025 and beyond. But we're going to go through a little bit of an adjustment period as things kind of unfold with the American politics. So go ahead, subscribe to the channel, reach out if you want to dive into the data in a lot more detail. If you want to read the reports on your own, the links are in the description, the edited copies of the reports. If you want to understand the buyer's guides, it's actually in the PDF reports as well in its own thing. You don't need to put your contact information. I just want to offer you value. Go ahead, give it a read, reach out if you have questions, book a Zoom call if you are curious about getting some more information. But that's all I have to say. We'll see you on the next one. Peace.